Okay, ladies and gentlemen, I know everybody's tired. It's been a very long day. But this final discussion panel for today is on financing innovation, defining the options. From seed funding, early stage investment, SMEs investment, and VCs and PE, what are the new investment tools globally, regionally, and locally? And how these are serving companies' needs and are new instruments emerging. To answer these questions and more, we are joined by Hisham Ruwaihi, Yusuf Hamiduddin, Numan, and Hala Fadel. And moderating this session is Emil Qubaisi. Emil is managing partner of Silicon Badia and the Badia Impact Fund. He's director of several regional online and digital media companies. It's all yours, Emil. There's one mic here.
Well, can we use that? Well, first of all, thank you very much for staying here with us this afternoon. The few, the proud, it's good to have you. I think what we're talking about today, if in the context of everything that we're looking all around us in this conference, is really, the question is, how do we finance innovation, right? I think, you know, we're seeing a lot of, I'm sure a lot of you have met a lot of fantastic entrepreneurs. I'm sure a few entrepreneurs are in here now. And how do we get these innovative ideas to come to light? Whether we like it or not, financing plays a really, really important part. If you contextualize it to the region, we're at an inflection point. There is no question about it. I think our markets are growing. We see the talent emerging. We see market leaders start to grow and validate that we can innovate, we can build market-relevant companies that can be successful. You know, I mean, just yesterday we had, one small exit, so you see that there is interest in the market. And it's a very interesting time, I think, for all of us, particularly when we look at the investment community and what it is that we need to, get out of it, and how it is that we need to innovate as an industry to make something special happen. So these are the subjects that we're going to be looking at. We're going to be looking at, can we create $1 billion Middle Eastern tech company? Do we have the infrastructure to make it happen? How do we evolve our financing offerings to cater to the market? So I hope you'll enjoy it. We're very blessed to be joined by exceptional panelists. I'll start with Hala. We'll start with the lady, of course. Hala Fadel, I'm sure all of you know. For those that don't, she leads the MIT, chairs the MIT Enterprise Forum. I mean, she's a lot more than that. She's an angel investor. She's a beacon for everything that is investment in the region and everything that is entrepreneurship. She's a real champion of those that are trying to make it happen. And we're very proud of her. She's also just launched a new fund in Lebanon. Can we say that out loud? Yes. Yeah. So they've officially raised closed the fund in Lebanon that's going to be very active. So that's more support for the ecosystem. So called Leap Ventures. So we're blessed to have her. I will then jump to the troublemaker next to me. He looks as innocent as possible. Numan from Turkey. Numan is a managing partner, founder of 212, sorry. A venture firm in Turkey, and I've actually heard a lot of rave reviews about Numan's work in Turkey in terms of being a true venture investor in that market. So looking forward to learning from that. Hisham Ruwaihi, who I met this afternoon, exceptional individual, really giving us a perspective from a different side. He leads the Badr ICT incubator in the western region of Saudi Arabia, which I think is relevant and interesting for us because it's a government-led initiative, government-led incubation initiative. He also is driving an angel network there, which I think is also government-supported, and he'll definitely correct me if I'm wrong. And finally, a good friend, somebody who I have an enormous amount of respect for, Yusuf Hamiduddin, the CEO of Oasis 500. I'm not going to go into his credentials because we can all read them online, but just, a disruptor in every sense of the word. So I think we've got the right panelists. We need you now as the right audience, I think, to challenge and to really help us think through how do we mature and how do we evolve the finance ecosystem to allow all of this innovation that we're seeing around us, thrive, not just survive. I'm going to start off with Hala, just because she was the most stressed about me starting with her, and just really ask you, if you look at it, you've been so involved for such an extended period of time, and what has been the biggest change that you've seen in the financing ecosystem over the last 3 years?
Okay, so first of all, I think the people in this room are heroes, because to be still here at 5 p.m., thank you. You must be really interested. I hope we're up to it. So if I can maybe widen the scope of the question and say over the past 6 years or 7 years, what has changed?
Absolutely.
Because I think the dramatic change is from 6 to 7 years from today till today. So the MIT Enterprise Forum of the Pan-Arab region started 7 years ago, and the goal is to promote entrepreneurship across all countries in the Arab region. And 7 years ago, it was really desert land when you talk about entrepreneurship. I remember having to explain what entrepreneurship is about, not that we don't have to do it today, but it was like an alien word at the time, and technology startups, people still had the crash of 2000 in mind. So it wasn't very attractive as a proposition to be promoting entrepreneurs. And the need for it in terms of job creation and all the buzzwords that you hear today that in fact might be, we might be over-promising as an ecosystem, were not perceived as problems. So I think the dramatic change happened actually probably 3 years ago, and definitely after the Maktoub exit and other events in the region, other startups that got more visibility. People got interested in the sector, and especially, for example, in Jordan, a whole government-led initiative took place. So the financing scene is very different today. Because there are more people in it, it's more populated, but also because the different stages are somehow addressed, maybe not at the level we would want them to be addressed, but you have players from angel investors to seed investors to growth investors. So of course we need more, but we're in much, much better shape. And any question you ask me, I'm going to be positive and optimist about what has happened and the evolution this region has taken, because we're hoping for more.
Okay, since Numan's nodding his head, I'm not going to pick on you. I'm going to go down to Yusuf, and just maybe, what do you agree, or what would you add to, or what would you challenge in Hala's comment, in Hala's, her positivism?
Well, I mean, I think in general, I think there is a time for reflection. I've been basically leading Oasis 500 for a year, and what I've been trying to do is trying to address this challenging, basically, inflection point that we're in, and how can we identify the best model which allows us to finance. Now we are an accelerator, so we're very much a model that everybody understands. But I think the element is that there's a lot of if it's about capital, there's a lot of capital here. There's a lot of intervention. There's a lot of government intervention. Probably not as much as one would like to see from the private sector if I want to weigh out dollar value. So if I say how much money is available for funding from a government perspective, it might be in the billions of dollars. If I see how much of that is really focused about equity, then the number basically drops dramatically down. If you come and say how much of that is private funds focusing on equity, then the number actually becomes very, very small. So we have a big gap in the region between making this a relevant ecosystem for the creation of value across a process that people can easily recognize, adopt, and see some logic behind it. So I think from that angle, it's been an area of exploration and trying to see How do you, the word you used earlier on, how do you disrupt this process? Or how do you introduce something that is organically driven, organically grown? I'll end with one thought for everyone, basically, because it's been something that I've been working on and trying to use it as an extrapolation for a model. We do have, if when you say $1 billion business, if that's the valuation of the company, we do have technology companies that hit that mark, but they didn't come from this ecosystem. They came from family conglomerates that created them within their own sectors, and they are running 400, 300 million US dollars of revenue. So the question is, how do we create a bridge, and how do we basically create from such an ecosystem and have a much larger spillover of where you do see billion-dollar companies come out through this process that we're basically engaged in.
Norman, you wanted to add something?
Yeah, I mean, we have to basically think about when we say the financing, right? I don't know every single country's layout in Middle East, but I can talk about Turkey. Turkey is a country that the banks doesn't give the loan to the SMEs unless you have the collateral, like a house or land or something physical they can value. So you are not going to get any credit from any banks in Turkey. But we come there as an angels or incubation centers or accelerators or VCs or PEs. We go there and then we basically tell, here's $1 million and I'm not taking anything from you. There is no guarantee. You can just, I can lose that money. And that's new. I mean, a lot of people didn't know this. And we are basically teaching this one to the entire region, that this kind of financing is available in, again, I'm talking about in technology aspect, not infrastructure and all the other stuff, but we tell the people that yes, this is the financing available, and I think this is a big gap. I mean, this is not what has been changed in the last 3 or 6 years. It wasn't available at all. That's I think big improvement.
Yeah, so I think it's a fantastic point, and I think if we're breaking it down in terms of your thinking, and from Hala and from Yusuf, we have great momentum moving forward, okay, but there are still significant gaps that are out there. Now, we look at these significant gaps, and then we look to ourselves and we say, in today's world of technology innovation, time is everything. How do we fill this? And maybe Hisham, looking at it, I mean, here you have the government of Saudi Arabia that's being active, right? Are they doing enough? Can they do more? Is time against us?
Yes. Representing a government program which started in 2008 to support the ICT startups, entrepreneurs through several services from the infrastructure to advisory and so on, and facilitating finance. So a couple of years ago, we thought that the main reason for entrepreneurs not to be able to succeed is that there is a lack of financial channels in Saudi Arabia. There are a lot of banks that may provide loans, but entrepreneurs would want to avoid loans. It's heavy on their shoulders. And they would want to have a strategic partnership with investors and at least equity partners through either micro VCs and so. So a couple of years ago, the government, which supports BADA program where I currently represent, they thought of establishing an angel investor network. They called it SIRB. And this angel investor network basically aims to fill in this gap between the entrepreneurs and the angels and help them to be financed through strategic partnerships. And I would say in the last 3 years in Saudi Arabia also another group of angels emerged, which is called Uqal, and also accelerator programs where they actually seed fund entrepreneurs on a very early stage, actually from the ideation stage, moving forward. In the last year, we have seen also some, like the STC Ventures and Mobile, they have started to invest equity investments in startups as well. So I would say that in general, Saudi Arabia started to realize the importance of investing in ICT technology and entrepreneurs in general. That's all part of their plan of transforming to a knowledge-based economy, not to be based on oil and natural resources. That's why the government will and will continue to support entrepreneurs through either incubation programs or facilitating financing through angel investor networks and so on. Yeah.
Okay, I just want to ask the audience, just a show of hands, how many people believe there is a significant financing gap out there? Just in general. I mean, we can address that too. And how many of you believe that we can build, billion-dollar tech companies out of the Middle East? Right? So, there's a general consensus. So there's a general problem. I think it's just the fairest way to capture what's going on out here. And go ahead.
Yeah.
If you're ready.
Yeah, I just wanted to give it a shot because Yusuf's point is, very valid about, and we were talking earlier, so I can't remember if he made his point on stage or off stage, about the gap between the business mentality and us as aliens promoting technology entrepreneurship. And I think this gap will be filled when we prove that this is a profitable asset class. So today we're building the venture capital asset class, and not much money is flowing into it because so far the startups that have been funded have not materialized into successful financial investments. So as soon as we have one fund, or hopefully all the funds, deliver financial performance and financial returns, I think we're going to have a lot of inflows of money into this asset class, which is exactly what happened in other parts of the world.
Also, you have to understand that, Emil, as entrepreneurs in the region, they learn how to start a company, build a company, and grow faster. At the same time, technology investors also learning how to invest.
Right.
A lot of fundraisers, including myself, this is my first fund. Yes, I used to work in big corporation, Goldman, and then we used to have invested there, but I never raised a fund before. So when you raise your fund, you are more careful and you are more invest in a little bit and in the right companies. You try to choose the right companies. You don't have $1 billion to invest various companies. So you are a little bit more careful. So we are all learning it this time. And what governments are doing, in the region, I see that Lebanon is basically putting the fund supporting the funds, and Turkish government is also doing the same thing. They are putting about 500 million TL, which is $250 million for fund of fund to invest VC or PE funds. So what government needs to do, I think, in the region is promote private investors. So they need to basically bring more investors and then with a matching fund or supporting them to basically grow within the region, not the direct investment.
Right, and so it was very interesting because I hear this often. I even heard in the U.S. that the U.S. government played an important role in the creation of venture funds that put all of this forward. Hala, it may be worth just talking for 1 minute about what Lebanon did, and then maybe for us to open it up, just to take a few minutes to talk about what we think governments can do to enable access to finance in a much more practical way. Because I think the Lebanon experience has been extremely positive, right?
About a year ago, the Lebanese Central Bank issued a circular whereby it guarantees 75% of any bank's investments in the knowledge economy. So if a bank invests 2.5 million, then 7.5 million are invested by the central bank, and the loss of the bank is limited to 2.5 million, whereas the investment is 10 million. This is for 3% of the total bank's deposits, so it's about $400 million program.
So that moves the needle, right? It's a simple decision that moves the needle.
Yeah, so some could argue that this is overcapitalizing a small knowledge economy in Lebanon, but I'll just take one example. In the early 90s, the Norwegian government, that is a rich country but a small country on the scale of things, invested 600 million euros, or it wasn't euros at the time, but the equivalent of 600 million euros into the mobile economy. And you have the whole GSM system that was born, the Nokias and Ericsson of this world. So an excessive inflow of money into one sector, even if there's some waste on the way, ends up, I think, creating some positive reaction and some positive construction, out of it.
Sure. Yusuf, you wanted to add something, you were nodding away?
Well, I just wanted to basically get it's exposure also. It's not as easy. If I understand correctly, this is a World Bank Is the World Bank?
No, it's the central
It's
bank.
the central bank.
It's the government itself.
Okay.
It's the
Well, I
government.
think the area is we would love to see programs like this happen across the board. We just basically don't have, we have a lot of debt financing today. And I don't know how government will move away from debt financing to equity financing. At this stage, probably if Hisham can give us some input about what happens. in
Sure,
Saudi.
but this is innovation because it's just releasing reserves, right?
Yeah,
Yeah.
I mean, this is a similar thing that in Turkey they just announced and they are gonna do it. It's $250 million. The treasury of Turkish government is basically giving to the private institute who's gonna put the put in the matching fund. So if they will bring $250 million, government will give $250 million to the investor
And-
funds.
and
So
in
create
Turkey-
multiple different funds.
In Turkey, they have a tax.
Tax benefit. That's for
I mean,
angels.
every
Angels, yes.
For every angel, if
Yes,
they
we
put
worked
up
on it together.
$100,000, I think, or
One up to 1 million, 1 million lira, which is about $500,000.
we don't have that in our.
I mean, I think the way that I see is the government's role should be supporting private investors to invest the sector. And I
Hisham,
think they
jump
are
in
moving on
anytime.
those directions.
Yes, actually,
It's a free flow.
yes. We have the Saudi Savings and Credit Bank, which is owned by the government. They have allocated around 36 billion riyals to support entrepreneurs and to support SMEs in general. But how much of that is actually materialized or actually given out, that's a very low percentage. And because of their, it's a loan-based, but currently we are in talks with them to support our angel group to put a real against real, so 50% or actually 100%. So if an investor invests 1 million riyals, the Credit and Saving Bank will also invest 1 million riyals in the same investment. So there is a move from the government to support investment in technology, but it's a little bit slow. It's a slow process. There is a high reluctancy in investing in ICT currently in Saudi. Even from investors' point of view, they're still reluctant. That's why in SIRB we try to educate angels on the importance of investing in technology and give them some success stories in the region. But we do not have enough successful stories, unfortunately, that we can rely on. But we try to move forward on pushing them to put more money in ICT and rely or push back from investing in real estate and those dead money investments or slow investments.
Can I ask
Yeah,
a question?
yeah.
So why are they reluctant to invest in ICT? Is it the risk? Is it perceived as risky, or is it the lack of understanding?
The risk plays an important role because there is no regulation currently that we don't have a bankruptcy regulation, for example. So the liability would be really high on the investor. So there is a risk factor, trust factor, and there isn't enough successful stories for them to actually believe in ICT, in regional ICT startups. So that's basically.
So basically, not ready to switch the mindset.
Yeah, that's why we try to bring a lot of international expertise to come in and educate, give us their experience and how they have transformed their angels or their investors from traditional investments to ICT investments.
Well, I
It
mean,
will take some time.
Yeah, I'm going to go to Yusuf, but I'm going to just preface it. So we're hearing all of this, right? And we know that a disruption is required. I mean, for us to shift mindset is going to take time. It's going to take success. We mentioned, a lot of people have mentioned that. It's going to take so much to happen, right? Time is not necessarily on our side, right? So how do we disrupt? I mean, go ahead with what your thought, but I want you to address also how do we disrupt. And if anybody in the audience, I'd love to hear anybody that has ideas on how do we disrupt the finance ecosystem. That would be great. Just raise your hand.
Well, I mean, we've been very descriptive here. We're just about to say, we've described the situation, we've described the plans and what's happening and whatever, but at the end, I have a timeline that I work against, and I basically cannot...
There are two more there.
I mean, I basically have a specific timeline that I'm working against, and within that framework of a timeline, I have to have capital that comes in and invests in the portfolio companies that we have, let's say at the Oasis 500 from a practical perspective. So we've been very much working about on how do we capture interest from investors? And then how do we design things in a way that basically fits the relevancy of the ecosystem that we exist in? So one way of doing it was sector specific. So we understand that we have a great opportunity to invest in certain areas, and then we don't do the same reflection in those sectors. When I say sectors within IT, when we mirror it with the type of investments and investors that we need to have lined up ahead and engaged with us very early on. So an example of that is when we talk about urban development, people understand urban development and understand the relevancy of that for their day-to-day requirements. And we bring in people that can understand that easily and therefore see the valuation model. Because where is the big challenge? It's not about only that the money is not there. It's basically when somebody wants to give out the money and they sit with that startup, they find that this startup is basically having a valuation claim, and that valuation is where they enter into a hiccup. And that hiccup basically, in many ways, does not get resolved. So on one side, it's trying to bring in people from the sector, okay? Health, well, we find investors in the health sector, and they come in and invest in our startups at that early stage. And the same thing goes that they start to see value creation as part of their own investment. A live example, today we're talking with a chain of hospitals that comes and says, okay, well, you know, I understand what these people are trying to do, and I also understand if I put $100,000 in that business, I can see it grow to becoming $1 million in valuation because I'm going to give them a contribution towards their business. And that's the type of relevancy that you try to create with investors at a very early stage, and you become relevant to the dialogue that's happening.
Did anybody come up with the disruptive idea? Any thoughts from anybody in the audience here? Not one idea.
We're trying to resolve a problem for all of us here.
Yeah. Any questions though, just to tap into it? Go ahead.
Hi, Patrick Hall from USA's JCP program. Maybe, should I do it? Just seizing on your points in terms of, I'll say, incentive structures. This is a panel on financing innovations. The gap has been highlighted. What generally...
So, I mean, Abdullah, let's pick on you for a second, actually. I mean, so you're looking at it from the micro, from the crowd perspective. What do you see missing one level higher? And Abdullah, think about what disruption you'd like to see out of venture firms themselves.
Give me the money.
When you asked about a disruptive idea, I actually had an idea in my mind, but I didn't want to share it. What we've been seeing, like if you're asking what exactly do you mean by disruptive financing? Is it investing a lot in a sustainable way? So you want this kind of investing process to happen and to happen again in a sustainably so that it doesn't stop? I think the first thing that has to happen so that this kind of sustainable investment happens is that you need to invest a lot for the odds to start, for the success stories to show up. If you're investing in 8 startups every year, you're probably not going to be seeing a success. If you invest in 200 and 500 startups in the whole region, then the number of success stories will increase, and then this kind of virality of entrepreneurship and financing is going to increase, and people will follow the trend and will follow the wave. And this is when you will also see angel investors, you will see other institutions and other central banks of, just like in Lebanon, who will follow the trend and will also be interested in investing because they have seen just one success story will create this kind of difference. So this is my first idea, is maybe for the investors in the region to have more balls, maybe. When it comes to...
There's no censorship here.
Sorry. The second thing is maybe having a more of a base of pyramid model. Like I've been through the... in my previous startups, I've approached a lot of investors. Even in Zumal, I'm approaching investors. And I'm seeing they're looking too much into into the actual money. Like they have to invest to like sometimes it's more about the growth, it's more about supporting the ecosystem. If they're always looking for just, I want to invest now $1 million and I'm guaranteeing that it will turn to $5 million, there isn't any startup that has done this in the region. There isn't anyone. Like they can't build this rule for all startups. They have to find a more kind of lean way of financing.
So I'm going to pick on Narman for a second. Narman, just because looking at the venture model where we invest fewer deals versus what he's talking about in terms of being more aggressive, do we need to look at our model differently from the way that it's looked at in the US or in Europe?
I mean, it's different market. You can't really go and then take the model that it works in US and then trying to implement in here, because all ecosystem is different. So, and we all need, I mean, in the region, we need accelerators, we need investors who invest the seed money, we need investors who invest in the early stage, we need investors who invest in the later stage. So this is why it's all about collaboration, it's all about investing together and bringing companies up to the level. So, I mean, I hear you. I mean, we should have maybe in Jordan, instead of investing 8 or 10 companies, it should be 500 companies needs to be invested. I definitely agree. But it shouldn't be one investor, it should be multiple investors. So because each investor's criteria to invest is different. The way that I invest, I decide how to invest is very different than Emil or Hala to decide. Because our backgrounds are different, our look is different, our mindset is different. That's why you need to have multiple investors in each stage to invest in the sector. So this is how you grow, this is how you get bigger. And you do also end up investing together, co-investment, syndicating.
Anybody want to add anything?
Well, I mean, I'm still basically struggling with the concept, and I'm just sharing it, sort of thinking out loud here. But the element is there is a process happening. Okay, I mean, we talk about startups, and I think that's where I really feel every time I sit down with in investors and investment communities, and we see that there's this disconnect. First, there is an investment cycle that's happening and continuously going on. There are new ideas going out. There are new companies going out. Then we have the startup ecosystem. It's become an ecosystem by itself. And that ecosystem is not crossing over into that cycle that is happening. And if I come and give an example of a discussion I had recently where someone came and said, okay, you're asking me to come in and start a business. Okay, great. You're going to give me $30,000? Great. I'll take that $30,000. And then what? What's the cycle? So the cycle is going to go in across 7, 8, 9, 10 years. And in these 7, 8, 9, 10 years, at the end of these 7, 8, 9, 10 years, I might have, as an entrepreneur, the definition, 5, 10, 15, whatever the model ends up me still having equity inside the company. And potentially the valuation of this company is going to be, let's go with the average. Let's say it's a $500 million business, so that's the valuation. So I have 10% of that, so I have $50 million worth. Okay, well, there's an alternate existing cycle that is available to me today, where I get upfront from day one an investor that comes in, gives me the money, but takes 40% or 60%, right? And the relationship is totally different. This relationship is where they manufacture success. They actually make it work in a way, right? So I end up in 3, 5 years where I still get $50 million worth of value that I still have, but through a different cycle totally. Those are businesses, investors, that are not seeing eye to eye with us. And I think for startups and for us as an ecosystem, we need to work heavily so that we can be as disruptive as we want, to be the bridge. We need to bridge between these two circles and get them to merge rather than at this current point, they don't even intersect. Okay? So I think that that's an element that I keep thinking about is how do I make my accelerator and how do I make my ecosystem relevant to that audience and group that is not coming to neither my angel investment networks, is not attending my demo days, is not part of this discussion that we're right now having. If we want to have a lot of disruption from this region, we need to bring that dialogue to the floor, be very aggressive about it, and overcome it.
And I think that's a fair gap to assess. And I think the question that I would come to my head, to just go back and to ask you guys, is it that we do not have enough asset managers that inspire the confidence to bridge that gap? Or is it that it's not asset managers that are going to bridge that gap? It's going to be new forms of finance or new disruptions that happen that help to bring those, that help to connect those gaps or other gaps together. Go ahead, Hada, just to pick on you.
Yeah, well, I think it's both. First, on the question of asset managers, as I said before, I think we're building the credibility of this asset class. Right. And on the second part, I think part of the answer of why I would call them traditional business people are not interested in this asset class is because they haven't seen yet their own businesses impacted by technology. If you take the West, you have the whole printing industry that has been horribly, completely transformed by the digital world. You have the music industry that has been transformed, large enterprises that have been completely transformed by enterprise softwares, and e-commerce retailers that have if you take Inditex, the owners of Zara, I don't know, they don't disclose how much they do online now, but a significant amount of their business. This revolution has not happened in this part of the world yet. And when it happens, and when they see their own businesses transformed by technology or threatened by technology businesses, this is the wake-up call also for them to be part of this knowledge economy.
Well, the examples I gave are all coming from technology. They just give you an insight, and then there's a big, in the last 10 years, specifically on technology, all the conglomerate families of the region, what was the hobby of their kids? The only space they had to test, play, and do whatever they want to do, create companies, was technology. Okay, they were not invited into the core operation of the business, so they went and played in everything else. So, and that's why they're creating these companies that are creating 50, 100, $200 million, technology companies, and they're not in the playing field. We don't hear about them. We don't listen to them. They're not part of this argument or discussion, but they're companies led by young individuals that are making over $100 million in revenue today.
So let me ask you a question. These companies, how would you rate the level of innovation in them? Are these innovative technologies?
Some are very much innovative, and some are commercial, but they're within that space. If they came into the dialogue and the discussion, I think we can have a lot of value out of that going forward. They're very. I'll give another live example. I can't disclose the name, but let's talk about what was mentioned early on today, right? 3D printing. You'll be hearing soon that one of the biggest investors behind 3D printing globally will be a GCC individual. Okay. It's because it's relevant. They see this. They see the value of it, and they will take it light speed going forward because of, this is what they do. This is construction. That's what they basically work on continuously. So I think we have to be relevant more, and innovation will follow from their end also.
So you're saying that as investors, we should be trying to invest in sectors that are more relevant to the region or to these business people that...
Yes. In a straightforward, yes. Look at where the government spend is going. That's where you need to invest behind.
So
convert traditional to online, and with it will follow the gap, the bridge.
Yeah.
Do you want to add anything to that, Hisham? Yeah, okay. Numan, you wanted to?
No,
You're okay.
I agree, because when you look at some of the successful investments and all that other stuff, because people want to put the money to things that they understand, they see it, they can feel it. That's different, especially in the region.
I'll give an example of Turkey. When we were there with the World Bank once, they took us to a family business. It's a family business. I think it's on and they make washing machines. Okay, That's what they do. They make washing machines. The amount of innovation that they have created inside their own labs to make their washing machines outperform washing machines in Germany and in Europe and everywhere else is outstanding. And that's where they're putting their money in. So if I came as a startup to them and said, you know, I have something new in the washing machine business, let's say, you know what, that's where I want to put my money.
Mm-hmm.
But we're not coming to them with these elements. There's still that very big disconnect.
Does anybody have any questions or to add to these or to the comments? Go ahead. Yeah. And you're welcome to come forward as well, if it's easier for you.
I would like to comment on the questions that the lady asked. Why in this region haven't caught up to the San Francisco area or the Silicon Valley area? And obviously, you know, this is the most important question that someone would ask in a forum like this. And I would like just to raise one thing, is that we have a monopoly here on internet prices. It's basically, it costs like 1 gigabyte. It costs 3 JDs, it's $5. So how would you expect the streamlining of music or video to catch up with what people in the fiber ring in San Francisco would have? So obviously this region is going to stay in this status quo till the telecom companies try to ease or to make it more affordable, which I would call the affordability index of the internet services. If you want e-commerce to succeed, this means you have to bring down prices of telecoms. You cannot have telecoms, dictating the prices of internet usage, while everywhere else in the world they're having 1 gig fiber in Kansas, in cities, in the large cities, like it's crowd-funded, and even the traffic is crowd-sourced, not only the finance. So if you don't free the internet and make it affordable to the Jordanians, who can actually, on average, the salary is 180 JDs. This means it can buy only 60 gigabytes per month. That's all. So how would you expect them to streamline video or audio or anything else? Thank you.
Thank you. We didn't get your name. I'm sorry.
My name is Amjad Dawood.
Sharafna. You want to answer that, Mr. Hudhud? This is your space. I don't. Do you guys want to add anything to that? Let Khalid answer.
My name is Khalid Hudhud. I'm the new CEO of Intaj. I was working in public policy and telecommunication.
Congratulations.
Thank you. Thank you. It's a classic story of a chicken and the egg. Which comes first? You need economies of scale to bring down prices, and without prices coming down, the economies of scale will not materialize. So it's a classic situation. Somebody's got to have to do a sacrifice. I think the best place for this sacrifice is for these assets that are national assets, such as frequency, to be taken off the shelf. Somebody's got to make a decision that is an investment decision. Somebody's got to put the assets there and hope, build it and they will come, hope that companies will use this frequency to provide better prices for the internet, and that would create more economies and bring more money to the whole population. In fact, many of the frequencies are just sitting on the shelf collecting dust. It's a national resource, therefore it's a scarce asset. Therefore, the traditional way of looking at it is let's keep it in the vaults, and that's not very productive. Thank you.
So that's a big, bold step, right? And maybe to ask our distinguished guests to think of what their big, bold step would be. But go ahead, please.
Actually, Layali Ramahi, ICN.com. I have, mainly we were talking about something disruptive in terms of financing, and we were talking about an ecosystem that holds the entrepreneurs and the investors in the same cycle. We are talking about raising more funds for the region, and mainly we should look at the type of the investor in the region, which is more likely a higher percentage. They're not risk seekers, they're more risk averse. So maybe as people raising funds for entrepreneurs to carry this ecosystem, maybe there's something missing for the investor. They're not understanding basic numbers. Why am I supposed to invest in this startup, not this one? What is the reason behind the valuations that are being given for those companies? So the investor is not getting the normal ROI he's expecting from any other investment, or the time to get his money back. So the investor is missing a lot of information from people trying to convince them actually to invest into the sector. So aside from the problem that they do not understand the entire concept of the sector, this is not the case for anyone saying that they want to diversify their investments across the board. So to be able to come into this sector, isn't the financing literature and valuations missing from this part of investment, let's say?
I mean, I just want to make one comment. The way that we are seeing is, I mean, we've been talking only the investment part here. But in order to entrepreneurs ecosystem to improve or get into place, that I'm not giving the example that replicate the Silicon Valley or not. I'm just saying that having the big companies to come up, a lot of entrepreneurs come up, bigger volumes and all the other stuff. There are different components of the ecosystem, like a market. How big the market is? Do we have a marketplace? Do we have basically the consumer or people to use or buy the products? Do we have enough, the things that we are talking about, finance? Or do we have the right culture in there? I mean, none of the Middle East, including Turkey, they don't have the culture of entrepreneurship because failure is the big no-no. Or education. Are we giving the right education so that people question the system, people question or doing the research and trying to do more and more? Or do we have the support and service organization, the support of entrepreneurs? I mean, I know that there are some accounting firms that they are questioning if a startup should have a cash flow statement or not. This is their life. I mean, they need to have the cash flow statement. But a lot of accountants in the region, they don't know what the cash flow is because nobody is using it. Or regulations, I mean, this internet prices or access things or bankruptcy, all another thing. So there are about several different components of the ecosystem. They all have to grow. If we have, let's say, in Jordan, 50 different VCs, $1 billion invested companies, so what? If other parts doesn't come up, they will not able to find a company. Even if they find the companies to invest, companies will not able to grow because they won't have the skilled workforce to improve to that headcount from 20 to the 2,000. So you have to have all of them to grow together, not separately.
Okay. We have one question right there.
Thank you. I want to go back to the issue of regulation of the sector, which is very important. It is indeed extremely expensive, and you see countries around the world where the investments are much more successful, is where there is a lot of public investment in infrastructure. Europe, for instance, you have Australia, you have Canada, and more now countries in Africa, where the price of the megabit has decreased 10 or 20 times because of public investments in telecom as a public good. Same thing for the spectrum, liberating of the spectrum. So I just want to have your view on what are the prospects for more disruptive regulation of the sector in the MENA region. Thank you.
Hisham, do you want to take that? I mean, you're our government guy. When do we see government taking big, bold steps in the region, genuinely, and really move the needle?
I think specifically back in Saudi Arabia, the government is pushing heavily to, for themselves and for the private sector to invest in developing the ecosystem for entrepreneurship. There are a lot of programs from the government and also from the private sector, but I don't think that the regulations that would support entrepreneurs to protect them with investors is moving that quickly to support the ecosystem. It's a little bit slow, but they are moving forward. The problem is again in the mindset and the culture of investment in Saudi Arabia. It's still back in the traditional investments, and that's what I mentioned earlier, that we need to push them forward to invest in technology, and to and again one of the ladies mentioned that the valuation problem and how can we make sure that entrepreneurs are representing themselves in the right way. There has to be some government support where they can ensure protection for the investors and for the entrepreneurs. And what we have introduced in the angel network is that no entrepreneur would be able to meet an angel or in a pitching event unless he passes a very strict and thorough process to ensure that the valuation is right. He is asking for the right amount of money, and the use of fund is really illustrated well. So I would say the government is there to support, but still they need to have a lot of public-private partnership programs in that direction.
Numan, you wanted to add, or?
No, I mean, I personally disagree on that. Government should not get involved on business transaction of what the valuation is, how the money will be used, and all the other stuff. This is a completely business transaction between the company A to the investor B. Because then once you did get into that role, then you have set the rules, and it's not an open market, it's not a free market.
I totally agree with you. The government itself, it does not actually get into that, but it supports the function that is actually doing the intermediate. So those who are evaluating and making sure entrepreneurs are ready are actually angel investors, supported operationally only by the government.
I seen these changes, I'm sorry, I'm just going back and forth, but I seen these changes in Turkey. Because it's so hard to talk this way. I seen these changes in Turkey. I moved to Turkey 5 years ago back home, and when I moved, there were angel investors, or there were or individuals, or corporates, or VCs. They were going to the entrepreneur and saying, "Here, I will give you $1 million or 500, whatever it is, investment, but I get 60%, 80% of your company," because that was the norm. But as new investor comes in, smart investor comes in, I started my fund. I said, "Fine, I will give the same money, 20 to 30%. And they were really shocked. I mean, entrepreneurs coming to my office, "Are you really going to take only 20%? I said, "Yeah, that's how I value." So that should be, I mean, market will adjust themselves. That's the free market should happen that way. Otherwise, then you have all the controls. It's not good, I think. You can't have the foreign investors to come and invest, or other investors to come and invest, if you have over control.
To you, the point that was mentioned earlier, regulation, I'm not expecting any change in regulation in the next 5 years. The telecom operators from one side are not going to be as aggressive as they should be. There have been some discussions, I've interfaced with a lot of telecom regulators, and they've had discussions where do they take away the backbone and they invest, do municipalities own bandwidth and they basically make it available or not? But that discussion, I think, is going to take a very long time. Is that not helping us make investments? It's not hindering my investment decision at this stage. And so I think that the startups themselves and the investments that we want to do can work within the current cost matrix that they exist in, and potentially they can find other more relevant cost structures that can be favorable for them, that make economic sense, and they can work more and function more. So I don't think that's happening. I think the other area that we have a big challenge with is that's not helping our investment decisions also is lack of bankruptcy laws. Okay, I think that Hisham mentioned that earlier on. We don't have those, and I think those are more relevant to investors than they are, and to entrepreneurs, than regulation of the telecom sector or not. So I think that's an area that we need to address.
Yeah. You want to add one small point?
Yeah, very quickly, because I heard a lot of inspiring questions. So on the price of the cost of the internet, and I mean, of course, we need cheaper internet and better regulations and whatever. But I think this is not where the disruption comes from, because if you take the cost of internet as a percentage of the total cost of a startup or of a company, it's not the critical factor. What I think could be a disruption in the region is more talent brought to the region. I think it's more a critical question than the price of the internet. So if you have all the Arabs or all the Middle Eastern people from around the world coming back to the region, that would be good, or more education in the region. So that's a major disruption. And then on the valuation question, I think when it comes to financing innovation, we have to realize that we're on a different planet. So if it's like in physics, if you're no longer on planet Earth and in a black hole, the laws of physics no longer function. So the valuation, if you're using the same valuation for a traditional business, for a startup, it doesn't work. You have to have a different set of rules completely. And this is where the education needs to come from. It's not because we lost our mind or we're crazy or we're risk averse that we're coming up with this valuation, but this is what it takes to ignite innovation from a financial perspective. It takes some sunk cost for 5 years and incredible valuations, and then the value is created. This is the cycle of innovation, and it does not follow the traditional rules of valuation.
Thanks. I mean, I think it's a great way to sum up. I just want to, because we're out of time, unfortunately. We have two choices. I'm not going to opt for a last question. I'm actually going to go for the question because you guys are much more important. So go ahead, if that's okay with everybody here.
Somebody has a question?
Yeah, sorry. Our last question, then we'll
Yes,
shut
who has a question?
it. The farthest guy. Come closer.
Okay, we have two questions.
Help the lady out.
Where we have time, but everybody's
She's
invited
wearing
to
high
dinner
heels, so you have
at
to
7
help her
o'clock
out.
in the gym area,
So we'll
so
take
we
these
just
two
want you
questions
to unwind a
Just
little
line
bit.
up and then we can take the question.
Yes.
Yes. Regarding the price of the internet in the region, I totally agree with you about it's not making any difference because in one hand the prices are high comparing by the prices in the US and Europe, but on the other hand the big players and they have a good market share and percentage of their revenue from our region. It means that the users in our region, they are paying for the services which comes from the US and Europe, and there is no obstacle from the price of the internet. It means that the problem is in our companies. We don't focus on good technology or good service and good products, and we have to improve in those areas.
Thank you. Thank you very much. We'll just get the other question, then we can have closing thoughts.
Hey, my name is Shannon Clark. I'm from MediReview, one of the OSS 500 companies. I actually like to back up some of the things that were mentioned on stage here, especially what Youssef said, really targeting investment actually at current business desires. If you really think about it, a lot of the companies that we have now, even large companies, everybody wants to be innovative, right? But maybe within their actual staff, they don't actually have those innovative departments. The real strength of business accelerators and startup accelerators that we now have been tapped around the world is that they actually have everything right there for those businesses, Cisco, Zane, whatever it may be, to become innovative. They can bring these startups in. And rather than actually asking the startups to pitch a new idea, to look for the sexy, disruptive idea powered by technology, why not think about the type of investment you actually want? Is it for growth? Is it for acquisition? And then see, okay, what is out there? So for instance, Youssef would have mentioned the laundry company. But if you look at the opportunities, for instance, in health and also in 3D printing, only within the last 2 years, people have actually started to realize what impacts 3D printing could have on construction. However, a lot of professionals around the world, a lot of long-standing companies in construction that want to innovate, want to utilize technology, but they don't know how. They would like to outsource that risk. Who better to outsource that risk to than to startups? If they could outsource that risk to startups, investors are already there. They can invest in the startup. Maybe they can even build a relationship where they can invest in the company as well. And they could either accelerate the path towards acquisition by the large company, or they can tailor it so that the startup would gain the trust and the confidence from having the large backer and then be able to scale to other customers. If you really think about it, startups right now, they go to an accelerator and they have to build everything. They have to build a product, they have to build the confidence in the market, they have to build the experiences that don't have it, and it's almost an impossible but exciting opportunity for the entrepreneur and for the investor. The answer to the question is not the American model, where we just have more and more investors and more investments. It doesn't make sense. You need to be more strategic with it.
And that's a statement, not a question.
Yes, I'm backing it up.
Okay.
Yes, statement.
Okay. Well, listen, I think because we're out of time, we're going to wrap up.
Emil, we just have one comment here.
Oh, I'm sorry.
Sorry, I just
Caught me blind. Go
because
ahead.
I think my answer was, or my question was misunderstood. when I said internet prices, I didn't mean for the producer or the entrepreneur. I really meant the consumer. If I want people in Mafraq or people in Aqaba or people in Ghorsafi to use my services, don't you think that they should be affordable for them to use the common sense government resources and other content that I'm trying to put for them on the internet?
Yeah.
Now, let me just make another comment. And we did actually a study which was done and sponsored by ACM Jordan. We have an actually ACM Jordan, which I have to chair, and IEEE. And we estimated the cost of delivering a gigabit to every Jordanian to be 1 single cent. And the three companies, the telecom partners that are sponsoring this event, actually they charge at least 300 times the cost that they incur. Thank you very much.
Thank you. I mean, just to highlight your point. I can't comment, but because I'm a moderator, but I'll just make one comment. I'm actually a strong believer that the government making strong disruptive policies, such as what Khalid was talking about, in terms of just taking a bold statement in a few key places, can be transformative for the ecosystem. So I think the message is well received. We have to wrap up because before we get you guys all late for dinner. But I just maybe have one of you, and you can choose who. Maybe Hala, we'll let you do it as the lady since you started us off, right? So what is 5 years from now? You're the optimist. What do we look like as a tech scene? Do we have a $1 billion IPO? What's going on? Or does it even matter? What do you see? Somebody else can help her in case.
Yeah, no, I'll push it to 7-8 years from now.
Fair enough.
Yeah, we'll have a handful of sizable technology companies out of the region, and hopefully all of us will have co-invested in this because it will take a lot of collaboration between the investors and between the different countries to make that happen, and hopefully global technology innovators from the region.
And we have to act as a region, not as a single country. That's the only way that we can achieve this one.
Yusuf, do you want to add anything?
We are very relevant in 7-8 years from now to where we are today.
Last thought, Sidna? Okay. We're all set. Well, first of all, I think all of you owe each other a huge round of applause for staying through till 6:15, 6:30, and to our wonderful panelists, and to Alia as well.
Thank you guys
with us
very
all the way
much.
till the end.
Thank you very much. Thank you, Hisham,
Hope you enjoyed
Yusuf, Hala, Nauman, Tashakkur, Emil, thank you very much. Ladies and gentlemen, you are all invited to dinner at the gym area at 7 o'clock. Tomorrow will be our second and final day. We are hoping to meet here at 8:30 in the morning. It's a long, interesting program. A lot of our guests will be traveling tomorrow, and therefore we have no time to waste. Have a great evening, and I'll see you all tomorrow.